TK, we
Darryl,
are live, baby!
we made it!
I don't know if this is working properly, but here we go. We are live
happy.
for our very first live stream for the
On
Canadian
the west
real
coast
estate
of Canada, Vancouver.
Oh my God. TK, how are you? Today was crazy for me trying to set this thing up, but we made it. We made it.
Today was amazing. What an
Oh,
amazing
wow.
day here in Vancouver. The weather was fantastic.
Fantastic. We flew all the way out here for our special guest today.
It's okay.
And
here we are.
Unfortunately, he is an extraordinarily busy realtor and he had to postpone.
Open houses. Damn those open houses.
Hey, listen.
Just left, right, and center, these realtors.
Well,
hey?
If you have an opportunity to sell anything or get a chance to maybe sell anything now,
yeah, it's crazy.
I guess you got to jump on it,
look,
right?
Look what people are doing. Actually, I don't know if I can get into this right away if that's okay, but like all of a sudden now realtors got to work, right? So it's like open houses are back, you know, they're out there. I'm on the, like, I get so many calls from agents just like, what did you think about my listing? You showed it on Saturday at 6. I'm like, yeah, it's 6:15. I just left. I'm in the driveway. Would you let me get home first? Or like, are your clients interested?
I just got out the door. Like, you're looking at my back.
Right.
Wow.
Like, leave me alone already, you know? So it's interesting, you know, all the work that realtors used to do for many years and didn't have to do the last 2, they're back at it now. Good for them.
Do they even
the grind is back.
What to do?
I think some of them do, but some of them don't.
Wow.
We'll find out.
Well, TK, there's a brand new format for us. There is
live
comments here. Hello, Gary. Thank you. Not sure I have time to read everything that comes up, but hello,
I don't
Gary.
see the comments, but hey, how are you?
Hello, Etal Style for Life. Prediction for the next interest rate hike in July, TK. We're
talking about it. We're talking about, that's a topic. That's a hot topic.
To get there for sure. We got lots to talk about today. Holy Mackinac. Okay, hopefully that worked out okay. Welcome back to the show, TK. Here we go. Holy cow. Well, the wealthy marketer says, hi, guys.
Let's get bearish.
Woo! Well, you've come to the right place. Yeah,
hot topic.
Come to the right place for bearishness. Although, maybe people are confused because people tend to think that I am a bear for some reason, but if I remember correctly, I've been like, guys, like, I'm a little bit nervous for I don't even know how long. If I go back into all of our old videos, like there's a lot of the market is cooling and oh my God, and what's going on and how long can this last and Evergrande and oh my God, man, like
yeah, I think we've been overall
for a while.
bullish.
Is that bullish?
I think we've been overall bullish. Listen, first of all, I am the first to, you know, be able to look at the situation and say, this is the direction it's going. I think you and I have been very like honest about what we're seeing and what we're experiencing. And in March 2020, everyone would have thought that the market was going to crash, stock market, everything, and it rebounded. For you to go around saying it's going to crash, you would have been wrong for 2 years straight. I can't live with that type of pressure. You know, so I was seeing a bullish market up until 6 weeks ago because things have changed 100%, right?
It's just safer to be a bear. I mean, you're right, like 99% of the time. I mean, a bull, right? Bears are like maybe right once every in their lifetime years. If they're lucky.
Yeah. But either way, we're seeing the changes. I mean, let's get into it. I mean, the Bank of Canada's announcement, 0.5% increase on the overnight rate.
Another 0.5%, TK.
Pretty substantial. Variable rates now are hovering just under 3%. You know, 5-year fixed rates, I'm sure, are going to start climbing up. The bond market is climbing up. We've got a lot of concerned people out there because obviously rates going up. People start to put a freeze on everything, and the Bank of Canada is saying, "Hey guys, we're not even done yet. We're still looking at increasing this to either the top end of neutral, which be 3% or beyond. We want to make sure that this economy doesn't overheat
quick
right?
too. Like they're busy
because it's been hot. It's been running hot.
I heard a rumor.
You heard a rumor?
Right now, Tiff is waiting for his custom-made, gigantic 75 basis point hammer that he is planning on dropping on us.
Wouldn't it have made sense to just drop it like all at once? Why are we getting this piecemeal? Right? Why is it why the suspense, Tiff? Why not just come forward and say, look, this is where we needed to be. We were at 0.25%. Now we're at 3%. Here you go. I think that takes courage. And I think that that's what government lacks. They lack courage. They don't want to make those tough decisions because they're concerned about what people are going to think. But that was what it was. We should have put a stop on that, inflation,
a year ago.
The inflationary pressures a long time ago. Right.
So the way I see it is it seems like, right now it's like either gas or brake. Gas or brake. And there doesn't seem to be a mechanism to just go maybe gas brake, gas brake, gas brake. Like if they're really trying to accomplish something, I don't think they know what they're doing, or their plan is not the same as everybody else's and not what they're actually conveying. And I don't want to be a conspiracy theorist. Well, I do, but
just be one anyway.
We'll save that for Mike Martins when he comes on the show soon. But if you judge something by its actions, not its words, what are they trying to accomplish right now? It doesn't seem like they're really back. No, but are they?
They are. That's their chief objective, because right now you got to have people with a more realistic outlook on what their monthly expenses are going to be. You can't have people constantly on fixed incomes, the general Canadian population not knowing exactly what their costs are going to be that month. You got to have stabilization, right? The big issue is all these inflation numbers come out and it's so misleading. It's like any inflation numbers that come out are months and months and months behind. Whatever the real inflation is today, I'm not going to see that until September. Right. So we don't really know what
people aren't
cost of goods are because of the timeline that it takes. And here's the big thing that this has been the talk in the media, and this is something that is true, and I'm seeing it firsthand, is the self-fulfilling prophecies of inflation. This is what happens. People start to talk about inflation comes. I'm sitting there thinking, man, it's inflation. I better pay more. I better charge more. I better, be willing to spend more, right? So that's the thing, is now that this inflation spiraling is starting to happen, this is what they have to present. They need to slap us on that 3% overnight rate ASAP. You need to shake people up. We need people to start really, really putting the brakes on what they're doing, because this could get out of control. This could go a lot further than what anybody could ever have dreamed of, at least anybody who's less than 50 years, or probably less than 70 years old. Because even people who are 50, they were kids in the 70s. They don't remember what those days were like. Right?
Well, it is definitely going to get crazy. Andrew G says they should have done this in 2021 and by quarter points each time. And I don't think you'll have anybody that'll disagree with that, right? That's absolutely the case. Now, TK.
Well, here's the other thing. What are we talking about?
Well, in weird times like this, it's always nice to have a tool that can help you analyze things and help you navigate your next purchase, right?
Yeah. This is huge, especially when people are still going to be buying real estate. People will still own real estate. Real estate is not going anywhere. You don't just get rid of, a piece of land. You have to have your investments in order. And what we like, I guess, what I'm liking the most, Darryl, to speak for myself here, is that landlord is giving me information that I never would be tracking. They're notifying me about when I need to have rent increases, when I need to collect rent, what maintenance items need to be done. They're letting me know about metrics that I never even thought about, but you're looking at real performance numbers on each property that you put in there. And the best part is too, like you can set up these little deal analyzers where you're actually looking at properties. You can set parameters so you know, okay, once I find a deal that gives me this type of return, I'm going to push forward on it. And in a bearish market like this, you really want to make sure you know what you're getting into. So
Absolutely.
Landlord is our sponsor, and it's a great free
Wonderful
app.
sponsor.
If you check out the link below, Darryl.
Absolutely. Best app of all time. Check the link and click it in the description below. It's free. Check it out. Thank you, landlord.
So here's the other part, right? Is how much debt we have. So when we start looking at, this is Benjamin Tall. Okay. So he's basically looking at it like, how much debt has Canadians take on? In the States in 2008, they deleveraged, right? They basically were in a position where the global Great Recession had everybody basically lose their homes, property prices went down, debt levels went down. So everybody's household debt to income ratio dropped significantly. I think it dropped to, somewhere close to like 120% from 140. Ours continued to rise. I think we were at 120. We went up to 140 and now beyond, right? So we've got a lot more debt than the Americans. So constantly in the past, we've always looked at, how the Fed compares to the Bank of Canada and how the interest rate rises are always going to be coinciding with each other. Now, I believe that we were going to have a much more substantial, and this is again from Benjamin Tal, we're going to have a much more impactful result from the rise in interest rates because we are heavily indebted. If this goes up to 3%, this is really going to change people's situation. And there's going to be a lot of people who are going to be spending a lot less money because of that.
Well, and the crazy thing is 3% doesn't sound like that much to me, but the fact is it's another doubling of the interest rate, right? Yeah. So, people's more, one thing though, is that a lot of people haven't paid these new mortgage rates yet, right? Like most people have locked in rates from 120 days ago, 90 days ago. So a lot of this hasn't even got into the market and affected people, right? A lot of people, I would imagine, that have rates locked in with the bank were just rushing to get something closed as quickly as they could because they were locked in at maybe 1.5, 2 points or 1 3/4. I have no idea. And next thing you know, they're looking at 4.5% for a 5-year fixed, right?
I think we're going to 6 on the fixed rates, by the end of this, by the fall. And I think that you and I have actually suggested this about a year ago in videos. We were saying rates should be at 6%. You should not be able to go and get a 3 or 4% interest rate. That's the truth. That's cheap money, right? Rates should be at 6%. It'll control what people are.
6 in our lifetimes. I've never seen a 6% rate.
That's what it should be at. I'm not saying that it should be there forever, but that's what it should be at in order for us to be able to be responsible with the amount of debt that everyone's taking on. Right. So I believe that's where it's going. I believe that the Bank of Canada is going to go up to that 3%. I think it's going to be as impactful as they want. I think that there's going to be a lot of other issues that are out of our control because usually what happens when you're dealing with inflation is you've got sort of like domestic and international influences. And I think domestically, we're going to have a huge change in consumer spending and that people are really going to have to start thinking twice. Yeah. I think that these other inflationary international pressures, like on different commodities, fuel, food, and whatever's being shipped, household goods, durable goods, that's going to be something that is going to take a little bit longer to get under control, and rates are going to have to remain elevated for quite some time, until things can get balanced out. Stuff.
So we got Adrian Franco here in the chat saying 6% on $1 million. Good luck with that.
So people were stress tested. This is an important thing to understand. People have been stress tested for every loan since 2018 at 5.25, roughly. I think there was a little bit of I think it was closer to 5 at one point. It went up to 540. In that ballpark range, people have been stress tested at that rate. So based on their income and their debt service ratios, they can qualify for those loans. Anybody who's been, getting a mortgage at these really discounted prices, we're still stress test. But remember, they're going to have a 5-year fixed rate mortgage for the, unless they went variable, which is different. But if they did a 5-year fix at like 2%, which is what a lot of people did, 2.5, 2.8, really sweet deals, they're going to have a 5-year term. So it means that they're not going to have to renew for a while. So they're going to have, less of a mortgage paid off. They're going to have different options. They might be able to foresee their job security if they're going to have to sell or whatever it is. So there's a lot of escapes here. Actually, the stress test really was pretty prophetic as far as OSFI putting that in a couple years back, 4 years ago. So I'm not too concerned about people affording the stress test. Now, if you were going out and getting a loan that you shouldn't have, if you were,
parents
banking on some
money.
other types of financing, there's all these different scenarios where there are people who are going to be struggling. But I think for the most part, interest rates have been low and that people's payments have been something that was more manageable. And I know what you're saying. Sorry, I forget who commented that. Adrian, I know what you're saying. The $1 million loan at 6%, like that's, a huge amount of interest paid every year. It's a huge amount of payment every year. But at the end of the day, are people going to be getting $1 million? Like, this is the thing right now, who has those $1 million loans? They're paying 2-3%. And so, yeah, in a few years from now, that $1 million loan will be paid down to maybe close to 900. Then they will be able to reassess their situation. We'll see where the market is. But do I think that people will be getting $1 million loans at 6%? Not many. I don't think people are going to be applying for $1 million loans. That's a good thing. This is what we need to do. Like, I know that the market and the real estate people and everybody doesn't want to hear that, but I don't believe that people should be signing up for $1 million mortgages. They're life sentences, right? There's very few people that I believe are responsible enough to take on that kind of mortgage and pay it down methodically to be able to get out from underneath that, right? People struggle with $200,000 mortgages for 40 years, trying to get up and down, struggling with life in different circumstances. So hopefully that does change, right?
But this is the crazy thing. It's like 20 something years ago, I bought my first house and my rate was like under 4%, but my house was like under $400,000. It was under $300,000. And I got like a single family house backing onto a park.
Yeah. Right.
So like, it is not the same game. It is not good for people trying to buy their first house unless they're fine with a 1-bedroom condo, which kind of segues into a couple of times I've seen here in the chat. Please talk about the downtown condo market. Please talk about the condo market. But before we do, please, if you haven't already, hit the like button wherever the heck it is over here. Hit that like button, hit subscribe, hit the like button again. No, don't hit it again because that'll turn it off. Hit the like button, hit subscribe, and smash that bell for notifications. So
throw your comments down below too. Let us know if you got any questions. We're doing our first live stream. Welcome if you just joined us.
Hello.
We are talking about everything dirty real estate talk. Let's go.
Yeah. So condo market downtown seems to be still strong from everything that I can gather.
Holding up.
It's holding up.
It's holding up. Toronto market overall is holding up relatively well, but the downtown condo market is now starting to get an elevated amount of listings.
Well, but not only is it holding up, it's kind of carrying Toronto. So if you look at the stats, if you look at the stats, Toronto at the moment is the only area in the GTA that is positive when it comes to pricing. But if you eliminate the condo market from it, it's not looking so good. Not as bad as, Durham or Bancroft or any of those places, but it's still doing okay, but it has gone down. If you look at single family houses in Toronto, it's not so great. But the condo market is definitely like keeping things afloat.
But let's be honest here right now. So first of all, the downtown condo market. Do people want to be downtown? Of course they do. There's a lot of new buildings that have been built. There's a lot of new buildings under construction. There's a lot of new buildings under application. So we're going to have a lot of new units coming online. And where do you want to live? You want to live in the premium locations. You want to live in the newer units. You want to live in the hot spots. So there's going to be some buildings that are going to start suffering because we're going to have a saturation of listings and supply. And there's going to be older buildings with higher maintenance fees and less than desirable locations that are going to be hurting. I saw a post today about something that was like an older building along the lakeshore that, there's motivated seller looking to move it, an agent's reaching out, trying to get somebody, to bite. And that's because they can't sell it, with the traditional methods. Right. So there is going to be some issues with those less desirable units. Whereas in the past, the last couple of years, everything was selling. Third floor, it's going to sell. Looking over the dumpster, it's going to sell. No parking, it's going to sell.
You're paying extra for that dumpster
dated unit with tenants, causing all sorts of issues. It would still get sold. Those are going to be hard ones to sell. We're going to see some deals out there in the condo market too. No part of real estate is spared when it comes to higher borrowing costs. And when you take out what's been taken out of the market, let's talk about that. What's been taken out about the market is the craziness, the insanity, the fear of missing out. Real estate's the best investment. Don't worry. You can't lose. Buy. That is gone. There's not one person out there right now who is honestly still thinking that way, at least nobody that I've met. So everyone's being very cautious and calculated. There's still a ton of buyers though. There are still a ton of people who want to buy. I'm seeing lots of offers and lots of properties sell. You just have to be realistic on pricing. And that's something that the agent and the seller have to look at. Honestly, they have to eliminate. I've pretty much eliminated 2022 from every neighborhood that I've been in recently. And I'm looking at prices as far back as, August 2021. Anything from like March to June, we're still a little bit above that. So I'm not too concerned about that, but prices usually December, November, I can see like that those prices that were selling in November and December should be attainable today. And, some areas I've had to go back as far as August.
Well, so in barring any kind of monkeypox lockdown or anything like that, I mean, people are going back to work. People want to be downtown. People want to go to the baseball game. People want to go out to restaurants and to socialize. And I mean, I don't know if you've been downtown lately, but it looks like things are kind of back to normal, right? Now, if you go on Twitter or you read, real estate news articles, or if you even go into our live chat, I mean, you're going to see a lot of doom and gloom and craziness, and the world is coming to an end. And oh my God, it's going to be disease and brimstone. And I don't think that's the case. Like, it's going to be ugly for a lot of people, but not everybody. But it's going to be an interesting ride. But listen, maybe I'm crazy, but every time there's some kind of economic trauma in the world, we've seen the exact same reaction from the central banks: flood the market with money. Like, there's no alternative. So are they going to do it? Is it going to be different this time? Are they going to knock us into such a crazy recession for so long and not turn the tap back on? Like, is it really that bad? I mean, we're at 8%. CPI, or not even. Weren't we at like 6.8 last time?
6 point, yeah. But like, the GDP is slowing. So we've actually started to see the GDP slowing because we were at like a 6% growth in the economy, which is way too high. It's overheating. So now I think it's down in the 4.2 range, which means that it's starting to slow down. And they're looking at the unemployment numbers, and the unemployment numbers are saying we're at record low unemployment. So this is what the Bank of Canada is saying. We can afford higher rates based on the data. We can afford higher rates. So
right in the economy, but not in the real estate market. Like, there's only so far.
Well, they're looking at everything as a big picture, right? I mean, I don't think they're worried. I think the easiest way for them to bring down inflation is to drop the housing market. It's the easiest way for them. Like, think about that. If the cost of housing goes down, but what they didn't account for, maybe they did because they're smart people. I think they're smarter than us, Darryl. But maybe something that they weren't.
Why would you accounting even say for that? Like, they're so dumb. Like, why are they smarter?
Is the rental market, right? So that's going to be something that they have to take into consideration. The rental market's hot again.
But why? So why are investors not going to buy units to rent to the people?
This is the point. There's going to be always a demand for real estate, right? So I'm not concerned about the market either. Okay. But what I'm saying is, overall, the Bank of Canada is going to be looking at raising rates because we can afford to raise rates right now. We're in a very healthy economy.
We are for now. For now. But when you knock out 25% of GDP, right?
Yeah.
When you take, it's like when you destroy the real estate market, how long can that tank for?
It's not going to be as impactful, but it'll help with their numbers. It'll help with their inflation numbers. It'll help with cooling the market enough significantly so that they can actually make a real decision that's going to help. And right now, all these decisions are really soft, if you ask me.
like rents are going up like crazy right now, all over the place. Rents are going up like crazy, and there's bidding wars on rentals. Like Jordan Skrinko posted that, I don't know, out of 260 something or 40, I don't know, a significant number all went into multiple offers over asking in the rental market downtown, right? And that's not what's going to stop that now. Something, interest rates won't stop that, will it? I mean, I guess what will stop it is people
an
can't
influx
afford
of supply. Oh wait,
influx of supply.
Builders don't want
Where's
to
that?
builders don't want to build anymore because they look at the market too, and the cost of land and the cost of construction has gone up so much that there's a lot of people not going to be launching projects for a while. This will impact supply again because builders are all going to say the same thing. Based on what happened in 2020, I can't take the chance of me launching this project and finding out that my costs have gone up or the values of the units that I'm going to be selling afterwards have gone down, and they're going to wait for stabilization.
So Silverchair says that us two clowns were flip-flopping from sentence to sentence here, and that we should do a little research and come up with a thesis that supports it. And what do we say to Silverchair? Thank you for watching.
Thank you for commenting and being in the live stream.
I hope you hit the like button, Silverchair. Make sure you click the link for Landlord. Thank you. Thank you for being here. Hey, buddy. So anyways, us clowns are going to continue along if that's okay with you. Thank you very much. Oh, somebody deleted a message. I wonder if that was not so nice either.
So at the end of the day right now, are we heading into recession? No. We're not heading into a recession.
We're not?
Think about it. We're not heading into a recession. Right now, the economy's slowing. We've got inflation rising. The unemployment market right now is like incredibly low. We got a 5% unemployment rate, Darryl.
But don't we have
people are moving.
Didn't we have negative growth in the first quarter?
Not negative growth. It's just slowing down.
Slow growth. Okay.
It's slowing down, right? So, we get 1 quarter of contracting economy, right? Then I get it. Now we're heading into a recession. You might go 1 month, 1 quarter here, 1 quarter there. We'll see what happens. But as of right now, I think the highest percentage chance that I've heard about recession is a 30% chance, because all the other metrics that they use to look at recessions are showing positive signs.
I don't know. Listen, I've said it a few times. I have a partner who has a very large business, and I constantly am asking him, what's going on? What's going on? Are you feeling anything? You feeling anything? And for months he would say, no, we're booming. Like, I don't see a recession coming. And last week he started to say, we are definitely slowing down. And then you get Elon Musk saying, like, we're stopping hiring completely because I see something not so good coming down the pipe.
It's self-fulfilling, right?
All these Amazon
recessions are self-fulfilling. It's as long as everyone's talking about a recession, we're going to have a recession, right? But again, I'm just talking about the data. I'm not saying I know. If you're coming on this show because you're hoping to get answers from Darryl and I about the future, you're in the wrong YouTube channel.
But the data lags, and this is why we talk to people, and this is why we're in the business. So for example, I have another business that has clients that are very large developers, and I like to talk to them to get some insight. And they're saying, like, the market has changed in the last 20 years. Okay. The market has changed drastically, and we have much bigger players in the market. And those big players, if they think that things are not like a good environment to launch a project in, they'll just sit back and they'll wait until things come back around. And that doesn't help. That doesn't help the issue. It doesn't bring more supply on, right? So if one of the answers is more supply, and all the people that are supposed to be bringing the supply onto the market are all saying, hang on a sec, this is bananas. I'm not putting anything into this market. I don't want to risk not selling anything or having to sell at a lower price and ticking off the people in the previous phase. We're just going to hold tight and wait till things come back. And that's not good either. So you're going to have people waiting, and then you're going to have people going out of business, right? Launch, right? It may not be ugly now when we look at like data from last month, but this moves fast, right? And we haven't seen those rates kick in to people taking mortgages. So what happens? And then, people call for, like you were saying, let's go right to that rate of 3% right away. But it's not only about the real estate market. So all those jobs people have, when rates go up and the businesses aren't doing business anymore, they don't have those jobs anymore. Right? So, but I guess
I agree. Yeah.
and
businesses have borrowed money, and that they have rising interest rates on that borrowed funds. They won't be able to afford to borrow more funds. Again, self-fulfilling. Recessions will come. I'm reading some of the comments, and I'm 100% in agreement that a recession's possible, and that there's plenty of scenarios. But look at just how many opinions. Like, I love reading. What they're doing now is they're doing articles where they'll be like, here's 4 different opinions on the market, and here's this guy, and then you got this guy, and then you got this guy, and then you got this guy, and each one of them has got. And it's like, it's kind of funny because I'll always look at the industry. Like, if he's a real estate guy, he'll be like, oh, it's bullish, like Phil Soper, like CEO of Royal LePage. It's like short-term market turnaround. And in the fall, things are going to boom. Right. And then they're like, this guy here who wrote the book on Canada's biggest housing bubble, he says it's over. It's like, we're done. Right. Everyone's got their own take on it. I'm 100% sure that nobody has a clue which way it's going to go, and that there's a lot of theories out there. And I change my opinion often. I have the right to do so, and I'll stick by that. But right now, I'm seeing the market the way it is, and I'm seeing that there's a lot of people still doing well. And there's a lot of people, the wealth is that's the other part too that people don't understand, that the wealth is all in the hands of the people where rates affect the least. Right. I know you all have friends and people who bought these houses with these big, mortgages and all these type of stuff, but they're young and they've got jobs, and they'll go and get another job if they need to pay for those mortgages and rates and loans. The people who have the money are the older generations who have the least amount of debt. They're the ones who can afford, to have a small rate increase. They're the ones whose lifestyle changes very little based on rates. Right. So these rising rates to me today at 7:37 p.m. Eastern Standard Time, 4:37 Pacific, because that's where we are in Van City, to me, the rate increase is more so preventing people from taking on more debt, as opposed to having people default on their current debt. That's the most important part, is that it stops people from spending money on things that they currently don't have in order to be able to satisfy their needs. That's what we need to see a slowdown on. And I think the Bank of Canada has done their research on this to say we can afford, the people who have the debt already can afford to pay higher interest rates over the next few years, and that this is not going to cause the downturn that everybody is claiming it's going to happen. So I get it.
Then all the people that
plenty of times in the day I think the same way.
But all the people, that means, so all the people that don't currently have debt are maybe, if they're lucky, gonna get like a 1-bedroom plus den.
They're gonna take on less debt, and prices will come down in some areas, and they'll take on less debt, which is good. Come on, Darryl, this is a good thing. Some people should have $1 million mortgages. Some people can afford them, and they have the means to, weather the storm if there is one. But there's plenty of other people who have no idea. We talked a little bit last week. We had to edit our video and change a few things because there's examples of people in this world who are just not as responsible with their financial situation, right?
Sure.
Jordan's in the chat too, I saw.
Yeah, I saw Jordan in the chat. Where's my invite to this party? I actually just sent you one. I don't know
if we can get him on or what.
I don't know if I can get you in, but if you
we'll try. We're not sure what we're doing.
Get you in here.
Yeah.
You would be wonderful insight for what we're talking about. That's for sure. Let me know if you are able to get in or if you are having an issue.
So another thing is oil prices, right? Like I think I paid some pretty expensive cost of gas today, right?
Oh
like
my God, I'm pretty sure. I
got regular gas right in my car, which is awesome. So I bought it, and it was $2.11 in East Gwillimbury.
Oh my goodness, TK.
Cheap, right?
I filled up for $236.9 yesterday.
Yeah.
Holy,
that's awesome.
It's like, it's disgusting. I put $80 in my car. I had like a quarter tank left, and I barely got over half a tank for $80. That's absolutely insane. And it absolutely can't help anything. Well, so
I need 1 million barrels of oil by tomorrow, or else we're gonna have a problem.
Okay,
all right?
Yeah.
Okay. Sorry.
Did you take care of the
friend
problem?
in Saudi Arabia there? I had to straighten things out there. Things are getting tough over here, Darryl. Sorry, go ahead.
Are you getting your own special supply? Should I
look? things are rough right now. There's a lot of issues out there. Okay.
Buy
There's a lot of issues. So
EVs,
fuel costs. So OPEC is now, like, I think it was Russia's got 1.5 million barrels a day, right? Being shipped. Okay. 1.5 million barrels a day. And OPEC is like, yeah, we'll release an extra couple 100,000 barrels a month to be able to, ease the tensions in the world and distribute them evenly amongst the elites.
Yeah. What do they care?
Right? Like it's a huge conspiracy at the end of the day in order to keep oil prices high. We benefit from that immensely. I mean, the entire province of Alberta benefits from high energy costs, So when the oil prices go high and the natural gas prices go high, they start pumping it out faster than they possibly can, which also leads to deflationary pressures, to keep prices down. But at the end of the day, they start pumping it out and making it more available, which again adds to our economy. So, even though there's going to be some areas that are going to be hit, yes, real estate agents, you need to go and trade in your vehicle and get something that takes regular gas like me. Okay. I highly suggest it. It's a 30% savings in fuel, right?
Can't realtors work from home?
Can't you? Yeah. Maybe get like a Fiat or something, something simple, right?
Yeah,
motorcycle
or a bicycle.
Right? Get a bicycle. That's perfect.
Oh boy. We got a guest. This
is how it works. We pulled him in from the chat.
Look at
we pulled him in from the
Jordan
chat.
Skrinko.
How you guys doing?
We're loving it. We're loving it. First live event here. We got the chat going.
I didn't have the foresight that you'd be here, so unfortunately I can't put your name on this decal here. But
it's all good.
Is
Steve joining?
No, this is the thing. Is Steve? I guess he's busy selling a house. He had to bail.
He's doing open houses today.
If you were here at the beginning, you would have heard.
You can't sell houses anymore unless you do an open house. So
Steve's a real agent. I'm a YouTuber who sometimes trades in real estate. So there's a distinction to be made there.
Well, so talk to us, since people are interested in what's going on in the condo market, downtown condo market. You would probably be the best to answer. I'm sure we butchered that completely when we were talking about it.
Well, kind of a funny story. So I listed a condo, a referral from Steve, funny enough, in Etobicoke, somebody relocating out to Vancouver. And I listed it just over a week ago. And for the first week, we got 5 showings, which made me kind of nervous. So I called up NASMA, right? And I was like, hey, should I be nervous? And she was like, no, that's normal. It didn't look like we were getting a ton of interest. Feedback was price was high, et cetera, et cetera. And then on June 1st, the day of the rate hike, we got 5 back-to-back showings all day. Somebody lost my key. I had to drive to the property and scramble to try to find out, because she had given the key to somebody who did not have a showing booked in my unit. So random agent showing a different unit had my key and had no idea whose key it was. Anyways, we ended up getting 2 offers that night selling firm, which in this market is pretty rare. We sold for $9,000 under ask.
What's your thoughts on that? Was it?
Well, my initial thought was, I guess rate hikes are bullish for real estate because it happened the day of the 50-point rate hike, right? Sample size of 1.
Short closing.
Sample, nonetheless. Yeah. Short closing, 40 days. So, I mean,
weren't there rates about to run out?
Probably. It's probably a rate hold, to be honest with you. Yeah. So, I mean, the entry level, and it's a $750,000 condo, right? So it's an affordable condo on transit. That type of product's moving really well. I have another listing in Etobicoke that's been sitting for a month. In the last 2 weeks, we haven't had a single showing. So it's hit and miss, right? And that's $1 million condo. So it's really hit and miss. As far as like the broader market, putting aside my stupid anecdotes and looking at like what's actually happening in the market, condos are slowing down. And pre-construction is went from, gangbusters to a slow crawl in the last, call it 2 months. Where now we're still signing lots of deals. They're just bigger deals, $1 to $3 million deals for end users and, wealthy downsizers, empty nesters, whatever the case is. But all of our investor clients are, rightfully so, in my opinion, incredibly spooked and pumping the brakes and saying, no, I'm not going to pay $1,300 a foot for this pre-construction condo in the middle of nowhere. I'm going to wait and I'm going to see what happens with this, how this resale market kind of plays out.
Yeah.
Yeah. Well, I mean,
And
that
that's-
makes sense for the investors for sure. So, but hold on, what about
But that's what's been fueling the market. That's what's been fueling that pre-construction market, right?
Yeah,
and there's argument to say it's been fueling the entire market, right?
Yeah.
Well,
Investors have been fueling the freehold market as well.
So this
and
is
resale
great.
condos.
This is great. This is the opportunity that everybody has been waiting for. So like jump on it, because
in the resale though, you got to negotiate.
Well,
in
hold on a
pre-construction.
But okay, if rents are going up, okay, rents are going up, rates are going up. Won't investors like jump in at some point and go, holy cow, like I can rent this out. The rental prices are going insane. I don't have any more units to rent. Don't I need something new?
It's tough to say. I mean, I think you have a number of different types of investors in Toronto when it comes to condos. You have your educated type, your smart investors, we call them smart money, right? They will notice that, cap rate is actually improving. And when rates come down, if they come down, my opinion is that they will. But if they do come down in, 23, 24, due to whatever recession we enter, then in that case, cap rate overnight gets really, really good. If rents just went up 25, 30% and mortgage rates start coming down, suddenly cap rate, we see the opposite of what we've been seeing through COVID, which is cap rate compression. Those investors will definitely jump on it. Then you have sort of your, more herd-like investors who just buy things because of fear of missing out, right? They hear there's 2,000 worksheets at Galleria. They throw theirs in, they get their first choice. They're told you have 24 hours to sign for that. That's a very effective way to sell out a building, right? There's a reason why builders do it that way. And it's because if you feel like you got something that nobody else did and you have 24 hours or it goes to the next guy or the next 5 guys in line for that unit, you're going to sign and keep that unit. But the pressure is now off, right? The buyers are looking at these price lists going, this isn't changing. This price list hasn't changed in the last 2 weeks. And so it's giving them the opportunity to cross shop and look at many different projects at the same time, right? Whereas, 6 months ago, people didn't have that opportunity. So, I mean, I think eventually investors start jumping back in. I think it's too early now though. And that's what I've been advising most people. I mean, here's the thing though.
Too early now,
Yeah. And on the pre-construction side, it's something I ask clients all the time. Do you have 20% plus closing costs ready to go for resale condo? If the answer is no, but for sure you have capital you want to deploy into a pre-construction condo, waiting will do you no good, regardless of what happens in the market, because costs to build them are not going down, right? We need a very long sustained bear market before you start to see land values and labor costs correct. Right. So it's a law that's probably not in the cards. And so if for 100% certainty that you are buying a pre-construction condo in the next year, now is certainly better than a year from now. Right. But if you're buying resale or evaluating both options and you have the capital to be able to do either, then yeah, I mean, why rush?
There's a question here, Jordan, that just basically says they're planning to do something in 6 months and they're when the bottom is going to be hitting next year or something like that. So what are you thinking? If their plans are in the next 6 months, what a client comes to you right now and they said, hey, Jordan, I want to move in the next 6 months. It's end user, not investor. And what should I do? Because I have money and I have an approval and I have a need for housing.
Well, you call Jordan.
Good.
No, okay. So here's what you do. You go on Twitter.
Precondo.ca. Fill out the form.
Yeah. You go on Twitter. You follow a guy named Scott Ingram, and you watch every Tuesday for his months of inventory chart. And as soon as you see months of inventory plateau and start to come back down a little bit, that's your buying point. You just spotted the bottom of the market.
Well, so
what's the sign? What's the sign of the bottom of the market?
Inventory absorption starts to increase faster than new listings.
Sold signs.
Yeah.
Right.
Yeah.
You start seeing sold signs.
Well, you don't see those on condos,
it's
but
too late.
Freehold. Yeah.
Figuratively speaking.
Yeah.
Well, so I've mentioned this a couple of times in the past, and this is just my theory. I actually think, what was it, Zillow that put the brakes on hard all of a sudden a few months ago, and everybody thought that they were crazy, and one of the iBuying
the
platforms.
iBuyers, Zillow, that
was
last
Zillow?
year,
whichever one it was. I think they were right. Like that algorithm actually
It was
called what was about to happen, right? Everybody thought
yeah.
that it was broken and it made a mistake, but it actually looks right.
No, they were overpaying for properties and losing money. I think.
Yeah, I mean, it was the first time they were right. You could put it that way.
Well, listen, I'm sure they made a lot of money on the way up. They put the brakes on. Maybe they
Did
lost.
Didn't they
They
all
lost
lose
half
money?
$1 billion, and they made probably a bunch of money with
Yeah.
like stocks and shares, and a bunch of elites got rich,
they
and a
lose
bunch
all
of
the money on all
average
the
people
houses?
lost money on their share prices.
Well, so, but aren't these people tweaking their algorithms? And like, isn't there going to be a point where some computer says, now is the time to buy, the bottom is here, the metrics meet all of the qualifications we've been programmed for, go, go, go. And then some other algorithm is like, oh, well, now that somebody else is out there buying, maybe it's the bottom, it's time to buy. And then investors are like, people are buying again, shit, we better go. And then we just end up right back where we were again. I don't know how long that takes, but if rents are going up, prices are coming down, and interest rates are going up, isn't this like some kind of a storm brewing for investors to just jump back in? Like, who the hell else is going to be able to afford everything?
Well, I mean, one thing I can tell you is like I have a ton of investor clients and just friends and colleagues who have a ton of cash who are just waiting on the sidelines.
Just waiting.
So that is one of the things that I wonder about is like I know a lot of people sitting on a lot of cash who want to deploy, right? And are just waiting for an opportune time to do that. So I guess my question is yeah, when do they jump in? And I think inevitably the human condition, man, people just want to buy into strength. Like, naturally,
Sure.
that's just the way it works. And so it's going to take a plateau. And that's why there's always, it's hard to time markets. And to your point about algorithms figuring out where the market's going. I mean, yeah, that's stock trading, right? 70% of it is done by computers. Not retail, not real people sitting at a trading desk somewhere. 70% is completely digital, right? So it'll be interesting to see when they jump back in. But yeah, I mean, to anybody who's like sitting on the sidelines saying, I want to take advantage of this, just watch months of inventory. It's told the whole story, the whole pandemic, and going back a lot longer than that.
So, but
there's even going to be opportunities that come up, like, I mean, really, I don't think anything's ever changed. In my opinion, you buy a property the exact same way in a market going up as you do going down. You should be looking at why you're buying. You should be researching. You should be educating yourself. You should be making sure that you understand the market that you're going into. You should have the best financing lined up already. You should be getting advice from somebody who's a professional who knows. If you're buying pre-construction, be going to somebody like you, Jordan, condo markets, different things. Like you should have all those tools in place so that you make the best decision. Nobody is going to guarantee you when the market's going to move up or down. Like, nobody's going to give you in writing and say, hey, if it goes up, then this is what you get, and if it doesn't, then I'll give you back your deposit. Like, that's not how it works. So in this market, there may be an opportunity coming up in the next like 6 months, like this person's commenting here, where they're going to be able to get into something that they normally wouldn't have been able to. And they may never be able to get into, whether it be a certain neighborhood or a certain type of home. Like houses right now, or any properties, condos too, that need renovations are sitting. Nobody wants to do renovations, and anything that's going is really nice and special. So you might get a property where someone needs to sell, and they're going to take hundreds of thousands of dollars less than they would have in January to February or March. And you end up getting in the market at a decent interest rate, which could considerably go up higher, like if you wait a year for say. So like there's a ton of reasons why there's opportunities out there right now, but I'd give you the same advice as I did a year ago. Don't rush into it. Don't make foolish decisions. Don't buy with emotion, and look at all your options first, so that when you're buying, you're paying a price that makes sense for you to be there for the next 5+ years, because that's why you're buying.
Well, so
right?
when we're looking at stuff,
I just think people are scared right now, and they're all
sure.
Some people are waiting right now where they shouldn't be. They should be pushing the button to move forward. And just like some sellers right now who need to sell are going to wait, and they're going to say, oh, maybe in September my house will be worth more money, and most likely it won't be. And they're going to be waiting, and they're going to miss out on an opportunity right now to be able to get at least a decent buck.
Yeah, agreed.
Well, so how do you even know how to analyze anything now? Like, are we waiting for things to go back to what used to be normal? Is there going to be a new normal right now? Like, what do you think things are going to look like here in the next 4 to 6 months? Like, well, even backtrack, the last couple of launches downtown, like how did they do? Like,
Yeah, I won't name names, but not good, man.
not good,
Not
right?
good.
So like,
What does not good mean though? Sorry, just so I know. Like not
Like if
good,
you
like they
sell-
pulled the plug, or not good,
No,
like
but
it's not.
if you only sell 100 units, but you intended to sell 400, that's,
Mm.
you're like, okay, well, what do we do? Because we have to hit 75% sold or whatever our mark is to start construction. And now we're sitting on all this inventory. So do we pretend we launched it again in 2 weeks? Like, how do we tackle this from a marketing and sales standpoint, especially because most of the platinum agents have already moved on to the next hot thing? What do we really do here?
but are these guys crazy for even trying to launch now?
I don't think so. Like, I remember 2016 and 2017 as two of my best years ever. And those in those years, projects, well, really 15 and 16, we'll say, in those years, projects weren't selling. Weren't getting 1,000 worksheets on launch. They would take a year after launch to get up to 75% sold. And that's how I like it, because it means that buyers actually have choices. They're not shoved into their third or fourth favorite floor plan. And just because they need to get something, they actually get to cross shop multiple developers, multiple developments, pick the best deal for them, that kind of thing. So I would actually, and I mean, a lot of people on Twitter are telling me that I'll be in the bread line soon, but gotta love Twitter.
Me and you both. I think all three of us.
I'm gonna be assassinated soon.
We'll share food stamps. Okay, I'll let you know what I need.
Yeah. So like, to me, that's a balanced market, man. And I love balanced markets because who do I work with? Buyers. Right. And so all the people saying, wow, realtors made so much money in COVID. No, COVID sucked for a buyer's agent. It's the worst market of my career, bar none. When you have 30 buyers for a project and the developer goes, I know, Jordan, you've sold 100 units for you, but the best I can do is 5 units. I've got to call 25 people and tell them I didn't get them a unit. I lose them for life. They will never work with me again. Yeah. Right. And then, of course, there's things that happen behind the scenes. I have to call up other agents to try to scramble and find those units. And a lot of the times we do. So we make it work. But I mean, if we didn't have those connections, like, that's a lot of people to disappoint.
Right, but those people can't get rid of all their 5 allocations on their own.
Yes.
Some of them they'll sell 0 of them and co-op them all out, right?
Yeah, exactly. And thank God for those people.
Right.
Sometimes I need them. But yeah, no, I mean, it's a whole different pre-construction sales world right now. You can't just throw out a product with half-assed marketing, send it to the platinum, say, email this out and hope that the project's just going to blow out. It's not going to happen right now.
So what you said, Jordan, is a good point, because it ties back in all the areas of real estate. Is it the developer or the sellers? They just need to change their expectations. That it's going to take longer. They have to prepare for a year until they get to that 75% sold. They have to be willing to weather the storm and go through more marketing and obviously the obstacles that come with, the sales center being open longer and the staffing and all that kind of stuff. They just have to understand the market conditions better. Sellers have to clean their house for maybe 2 months before they sell it. They have to maybe drop the price a couple times before they get it sold.
Exactly. And just better client care, you could call it. So, it was ruthless during COVID when projects were selling out like crazy. Absolutely ruthless. It's like, hey, you got to bring us a bank draft within 24 hours or the unit's on to the next person. It's like, this person has a job, they have work, you know what I mean? Like that's difficult to do for some people. And things like, towards the end of COVID or, in the past few months, as projects were still doing well, a lot of developers still weren't letting you in the sales office. Like they weren't allowing you to bring clients to actually see the model, to see, to walk through the project in more detail. Yeah, exactly. And that's, I understand why, at the height of COVID, they weren't allowing that, but at this point, they're going to start allowing that again, because that is how you get somebody excited about a project when it's not just fear of missing out. You got to come show them everything about the project to get them excited about it.
Yeah. Responsible, transactions. That's what we're heading back towards.
Exactly.
Good news.
That is going to feel so weird to be able to put a condition in an offer. And actually, I guess people are dropping during the conditional periods, which is like crazy.
They're renegotiating. Look, man, that fence is leaning. what's going on with that fence
Yeah,
over
yeah,
there?
yeah.
Okay, that wasn't like that when I was here the other day. I was here for 15 minutes the other day. I would have noticed, right?
Anything, $5
Yeah.
off, $20 off,
Something.
$150 off. Hey, how about I want your
Yeah.
sofa now. I really liked your sofa.
I was talking about that with someone today, is that people were buying houses. They would go in for 15 minutes. Like, and this is more in January, where we have 200 showings in a week and all the 15-minute time slots were booked and you couldn't get in. There was like lineups of people. And so people would buy that for 15 minutes. They would see the house. They would make a bid. They would buy the property. They wouldn't actually see their property until they were already firm on a buyer's visit. And they'd go, oh, yeah, okay. Oh, I do like it. Yeah. How many people were disappointed on that buyer's visit?
Sure.
How many people are in their house right now going like, man, what did I do?
How come
Why
I
did
didn't
buy
notice
place?
this?
Why didn't I
did
get an inspection? Jeez.
Oh,
Because when the
man.
market goes up, this is now, because we're in a very litigious society. So right now the market is changing. So all the problems that happened, Darryl, case in point, last week's episode, all the problems that happened, the market would solve. Because, okay, so what? I bought a house without a home inspection and it needed 20 grand worth of work more than I thought it did. Well, my neighbor just sold for 50 grand more than I paid, and his house is a bigger dump than mine. I'm not going to sue the seller. I'm up, baby. Let's go. Now, as the market changes, everyone's going to be like, you know what? The seller didn't leave the the drapes in the living room. What's wrong with them? I paid them good money for their house. And then they're going to want to be able to sue them because the prices that they've paid, even in April, even some of the prices that they'll pay today, it's possible that when they move in August, the prices may not be worth it. Right.
Mhm.
Absolutely.
So get your litigation lawyers on speed dial if you're selling real estate, because you better do it right. And you better have somebody who knows what they're doing, because you could end up being in court together and you may not like them afterwards. So make sure that you got everybody looking out for you. There's a lot of stuff. 2017, that market, I loved reading all the cases from 2017, not because I wanted those people to be in those situations, but I learned a ton about all the shit that can go down in a real estate transaction. And there was a lot of stuff that we got educated on that we got to be better agents for. I became a better agent because I got to see the mistakes that other agents made and why, those mistakes shouldn't be made.
Well, hopefully this will clean out all of the crap from lenders, borrowers, agents, everybody. My prediction is still this thing's coming back. They're going to start dropping rates within this year. Maybe I'm crazy. I don't care. It's my opinion. I am far from an expert on this, but I don't see a depressionary style event. I don't see a hard crash landing. I don't see a soft landing, but I see it somewhere in between. But as soon as it's really painful here, I see them just having to reverse course. I don't think they have any other tricks up their sleeve, and I don't see how anybody benefits from a 1929 style depressionary crash.
I think your timeline's early. I think it's going to be at least another year of this where the market, the recession will still be, on the horizon, and everyone will be talking about it, but people will be financially stable and the economy will be doing not as good as it was, but still enough to be able to continue to have interest rate increases. They'll probably get to that neutral stage in the fall, and they'll keep it there as long as they can to make sure that inflation is gone and they've put out that fire as best they can. And when we do enter a recession, which is coming next year, the year after, we'll see when it comes, then we'll start to see rates come back down again to a more stimulative number.
And the last word goes to Mr. Skrinko. What's your prediction, sir?
No, I see someone in the chat making fun of me for calling 750 grand affordable.
You should see some of the crap going on in the chat.
So I just want to say, like, 750K for a brand new condo, 820 square feet with parking on the subway, built by Tridel. Yeah, it's pretty affordable, man.
Yeah.
I don't know how else to tell you it's affordable. This is the financial hub of Canada. This is the hub of Canada.
That's right.
It's not going to be in reach for everybody, right? If it's in reach for 50% of the population or even 40%, then we're doing pretty good. You look at the home ownership rate in New York. I know some guys are comparing to New York. I agree. You can't really compare us to New York. we're much smaller in a lot of ways. Like our GDP is what, like, in Detroit, it's like, you can't compare us to New York. But when you talk about how home ownership rate and affordability of income versus New York, or income versus price, we are better than New York by a long shot. So yeah, I mean, $750K is absolutely affordable for a 2-bedroom.
Oh, God, it's like cheap. I can't, like, where the hell do you even find that?
The average money launderer can afford it, no problem.
Absolutely.
So I don't know what you're talking about in the comments, but
Yeah. You just got to move some fentanyl money.
Yeah,
absolutely.
As far as predictions go, who knows, man? My crystal ball was 1 for 1 last year when I called the bottom for condos and the condo rip that preceded. So I don't want to damage my strike rate by making a false prediction. But I will say, look, I'll say this. It's funny, right? Now that the Bank of Canada is saying our mandate is inflation and we will do everything we have to keep it up, basically saying screw asset prices, we only have one goal. Now everyone, especially the bears, are taking them seriously. But if you look at the track record of the guidance Bank of Canada has given in the past, especially through COVID, and then what they ended up doing, they're full of shit most of the time.
All of the time.
So you have to remember, just sort of forward guidance in and of itself, it does affect the way consumers spend. And I think Toronto, especially because of how high the prices are relative to income, they do. I think consumers here are more educated than most places and more cautious as well. And as a result, I guess I question how much of the rate hike was priced in. That's the question I'm asking. How much of the future price hikes is already
priced in?
Yeah. And it'll be interesting
there already.
To see.
Yeah.
Maybe people are dumber than I think, and maybe it's going to crash way harder. Maybe this is just the beginning, but I don't think so.
Well, it might be the beginning. I just think it'll come back quickly. Look, in 2008, 2009, it crashed hard for some people. Just the people that had to sell, right? It crashed hard as hell. And 9 months later, it came back like a motherfucker, like boom, and went friggin' bananas. I know firsthand. I got absolutely destroyed in that market, like decimated. And I was like, 10 months later, if I could only have hung on for 10 more months, it would have changed everything. It would have been a huge success instead of an absolute failure.
We'd be sponsored by your company.
Success.
Yeah.
Absolutely. Well, gentlemen, it's been a pleasure. We are running overtime. Thank you so much, Mr. Skrinko, for joining us out of
nowhere.
Yeah, thanks for letting me slide into this
from the comments.
I was just scrolling through YouTube and I was like, what's this?
What is this craziness? Well,
that's
really
what we do here
it.
on the Canadian Real Estate Show. And if you haven't liked, commented, and subscribed to the channel yet, you got to ask yourself, why? What are you waiting for? Look what we're doing. Live events. We'll do another live event. Drop a comment.
Absolutely.